Good evening, everyone. In today's video, I am going to show my strategy, my daily trading strategy. So first thing, I only trade during the New York session at 9:30 in the morning. So what I do is normally I select my time to 5 minutes, and in 5 minutes, when the market opens, the first 5-minute candle, I try to mark the high and the low for the opening range. So this is the 5-minute candle, so we select the high and the low of the candle. Right when I select the high and the low of the candle, then I change the time to 1 minute. Okay, then in 1 minute, let me just go back. Okay, in the 1 minute, I wait for the market to break out either to the upside or to the downside. And the breakout needs to be with the fair value gap. So first thing first, when the market opens, if you see for the first, let's see, until this here, 946. So we did not have any breakout until 946. And at 946, we see a candle with the big fair value gap, but that got taken out with the next two candles. So there's no trade here. Then we waited. Again, this candle opens. There's a fair value gap right here, right? The candle came down, but with it just make the wick and then the body closed above. So this is the trade here. So we take the trade on this candle right here. So let's open the long position and see how much we can get out of it. So here's the position, and then the stop loss is going to be just below the first candle. So the three candles make fair value gap. So stop loss is going to be the below the first candle. And then in this we can manage to get here's the stop loss, so around 1:1.39. Okay, normally I go with 1:1. Sometimes you can go for the longer, so you can get 1:1 in this trade. Now the second, once you close your position on this, then what you can do is you can wait again. So the market came down, came back into the opening range, then this candle closed with the big fair value gap. Okay, so the fair value gap was not taken. This candle went up, tested, but it did not close. It did not take the fair value gap. So if we mark the fair value gap right here, okay, so the candle went up, closed below. Now see that we are also using the quick pips indicator with it. So we know the trend change from here, right? So we could have go for a short position as soon the trend change, but we can get the second confirmation. Okay, the second confirmation is breakout to the below of the opening range with the big fair value gap. So here your stop loss is going to be same thing. We open the short position at this candle here. Our stop loss is going to be above the first candle. So this is 1, 2, 3 candles, so just above this. And then if you see this trade, this is a big trade, so this can give you 1:15, more than 15. Okay, but and normally I don't sit this long. I normally try to get 1:1 or 1:2, and that's it. I exit my position. Now let's say you are in the trade and then the market is moving with the clouds. Okay, you can hold the trade until the candles are below this red cloud. Okay, as soon you see the candle went up and close above this cloud, this is where you can exit. And how you can enter again, you always wait for a small retracement. The candles go up the cloud, test the cloud, and give closing below the cloud. Same thing here. So let's say you took this trade, you get around 1:3, 1:4, whatever, and then you exit your position here. Now if you wait for next 2 minutes, then you see the candle, good bearish candle close below the cloud. So there was a clear rejection from here. So then you can open again a bearish or a short position here. Now this time your stop loss is going to be just above these wicks, the swing high. So here again you can wait until you get 1:2, or when the market or when the candle close above the cloud. So this is 1:2 here, but if you want to wait for the candle close, then this is your going to be your exit. This will be 1:1 maybe. Let's see, yeah, around 1:1. But before that even happened, you can easily catch 1:2. Now this is another trade. Okay, so then market came down, you took 1:2, now you waited again. Let's see, we take the 1:2 here. So we took the 1:2, this trade was successful, then we waited, candles went into the cloud again, then we see another bearish candle closing below the cloud. You can open another position, short position here, stop loss just above the swing high, then we can get another 1:2, about here. Okay, now we got another 1:2, same thing again. It's just keep repeating itself. So this candle went above, next candle closed below the cloud, and then we can open another short position here, stop loss just above these swing high, and then we catch 1:2 right here. Okay, so you will find a lot of these trades again and again and again. So this is how you can stay in the trade if you want to hold a position. As long the market is below and the clouds have a gap between them, you can hold the position. It is very easy. Normally, with the first breakout, I am normally done for the day. I take one or two trades, so as soon it start moving in your favor, um, just wait for it, um, book your profit and then call it a day. If you see a big trend coming, so then again, just wait for the breakout of the opening range and then follow the clouds. Follow the clouds, follow your trade, go with your daily target. As soon you are done with your daily target, then don't be greedy. Just call it a day and then, come back tomorrow. So this is a very easy, very simple setup that I follow. Only two things, just a breakout and then the clouds. The clouds show you a clean move upward or downward, and that's it. That's my trading strategy. If this helps, good luck with the trading. If you have any question, you can just leave a comment and then I will answer that. If you wanted to try the quick pips, we have a 3-day free trial, which you can go to the quick pips website. I can leave that in the description. It's quickpips.ai. You can also join our Discord to see how the other traders are doing. We normally try to share the profits daily, so you can check that. And yeah, it's pretty simple.